Hello, everyone. Welcome back to the RationalInvestor.com Broiler Chicken Show. Trade your trading plans. Don't take too much risk on any one trade, and just let yourself get rich. Hello, everybody. Welcome back to the RationalInvestor.com's Broiler Chicken Show. Back. Oh, boy, what a mess this market is, eh? Unfortunately, TRI, I guess, had a little bit of a data hiccup or something. Can't really give you a half-decent S&P 500 breadth message there. Yeah, we're not really getting the best breadth message from crypto. Very screwy market state. And unfortunately, when you see the breadth go like this, it's going to take a while for slow to work its way back down and bottom out. I think there were some pivots there a week or two ago. And actually, it's interesting to see the whole market sort of go down, test those lows. Do I want to pivot? Do I want to pivot? I suppose you could make the argument there's a bit of room between the two to support. Maybe I can zoom in a little bit here to support some sort of counter trend rally. It's kind of interesting. There are a few names that are trying to put in technical bottoms here right now, but actually kind of what I said with the Ethereum, I get the impression when I look at price action that we're kind of just sort of sitting in no man's land right now. I used to work with this one futures trader. In fact, actually, technically, I sort of still do. And I send tons of people to these guys. It's almost funny. Anyway, another conversation for another day. I might argue that we're basically sitting on something like Ethereum right in the middle of the range. Ideally, I want to buy things when they're cheap and see price return to the mean. And I get paid, kind of like what you saw in that Alibaba. That was a pretty good example where an asset was pretty cheap. And then they bid it up here through the summer, and Brian was selling into the rally. And now, basically, I think the story's over. Intel was a good one recently. I suppose I could show you those images, but buy when it's cheap, let it go when it returns to the mean. I suppose you could argue up top here, and actually we had a fun illustration with that silly little ZEC hunting short setups when these assets go straight parabolic up, and then now that we've come back down to the mean, and I think names like that ZEC have come back to the mean. It's not a bad idea to, if you're a trader, to maybe think about looking to capture maybe some dead cat bounce movement here. But for investors, as I was going to say there, a gentleman that I used to work with, and I love him to death. He's an absolutely beautiful person. Johnny Hoagland. And it's great because on the little Top Step platform now, they have his voice. The market is open. Order filled. You suck, Brian. No. Anyway, if you know who I'm talking about, you know he has a very distinctive voice. He's an absolute sweetheart. John Hoagland! Anyway, he would always, and of course, he's a big fan of volume profile and TPOs and all that kind of stuff. And he would absolutely hate when people take a trade at basically the POC or the median or the mean. You know, that's what this 50% rule is, WD GAN 101. So I like the idea, of course, buying against these lows. Look at all these cute little W's and taking profits on a return to the mean. Or if you're interested, against old highs, hunting M's and shorting and taking profits on a return to the mean. But right here, right now, I think there are far better fish to fry in other areas of the world. than going and investing in something like an Ethereum right now. It's an interesting anecdote on these funny little stocks that have turned themselves into crypto treasuries, whatever the hell that's supposed to mean. I'm still trying to figure out, and I've been in this space now for too long. What year is it? I'll say 12 years in earnest. I've been watching this for that long. I think I bought my first shitcoin in like 2013. I'm actually, frankly speaking, I'm a little disappointed that when I first got into this space, we were all going to be using Bitcoin, of course, for replacing the fiat currency system. Down with the US dollar. That hasn't quite panned out. But I'm still, other than store of value, what I do find interesting is whatever happened to SegWit. I remember that was supposed to be the money system we were all supposed to be using right around this time. So, in fact, I know Sjord himself, poor guy, still has Bitcoin lost and stolen from that whole SegWit experience. Anyway. So I'm still waiting for the use case. Like this is the way that you drive profitability using a cryptocurrency. I suppose to a certain degree, Ethereum with the smart contracts and all that, businesses might, creating tokens, real world assets, all that kind of fun stuff. How on earth do you actually determine what value is on any of those things? God, I don't know. And I have yet to hear anybody actually sit down and say, well, the way you derive the value off of one Ethereum is this, and this. And ironically enough, I distinctly remember, I don't know whether it was this cycle or the previous one, but Vitalik himself even came out and said, you're bidding the price of my asset up. His asset technically in his eyes is like a world supercomputer where he can like literally leverage the internet as a computer. And I don't like how you're driving the price of my asset up because it's making my supercomputer too expensive to use. And boom, down goes price. So I have a very hard time, I like the idea, and the whole reason why I got involved in the crypto story to begin with was, of course, fear cycle. Any student of mine knows that through the fear cycles, great reset, all that crap, they ram down our throats. Thank you, 1%, bankster crooks, Rothschilds, whatever the hell you want to call them. Nothing's changed in this human history now for the past 500-600 years after they burnt the London to the ground and did away with the tally stick system. We've been living in this con job of a currency world since then, really. Anyway. So I could completely understand the validity of a proof of work system, the immutable blockchain, and what is the value of having that monetary system that's completely outside of the bankster crooks' control. That to me makes a lot of sense. About 100,000 hundreds of cents. What's that? 10 million cents, right? Well, I guess not nowadays. 9 million, 8 million nowadays. Anyway, and I do like the model. It'll work probably until quantum computing comes along and can break these encoded passwords. Who knows how long that'll be? Some people speculate next week. But I think as long as that threat isn't, in the fore, I think there is serious value to the Bitcoin proposition and proof of work proposition. And unfortunately, a lot of the smart contracts that are floated off of these kind of networks, especially like Solana and all of its networks, how would you even fathom what the value of one of these shit coins is? Excuse my French, but I think that's what they politely call them. Altcoins, shalt coins, whatever you want to call them. As always, trying to make a concerted effort to try and reduce the swears. So I am making a conscious effort. And actually, Chris, you forgot to remind me before every single broadcast now for the rest of my life. Whoever the social media director is has to come in and remind Brian, watch the swears. Anyway. So be careful with this crypto story. And we're now into the greed cycle, which sadly, of course, is all about human greed. Gimme, 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 gimme. And unfortunately, I think a lot of people got sucked into the greed. And the worst part about it is you have the political leader down in the United States. And I would argue the political leader in my country is basically a wolf in sheep's clothing. He's a real nasty character. And now he's actually been completely caught lying directly to the Canadian public. So I hope to God the Canadian public wakes up and sees that they've put a frickin' Rothschilds in control of our country. And these Rothschilds don't give a crap about your nation or nationalism or what your life was like. And they would burn the city of London down in a heartbeat if it meant that they could take control of the system. And I think they did. In the U.S. Civil War, Abe wanted to try and keep the Union together. The international banking cartel wanted to dismantle the United States of America, and they said, fine, we'll finance your war at 20% interest, right? They don't give a shoot about you or your country or anything. The only thing they care about is lining their pockets more and more and more. So I'm a little concerned that the political vacuum that exists right now is extremely dangerous when you go through these generational transitions. It's how a character like Napoleon could come into power. One might argue that in the United States of America, its creation was through one of these cycle pivots. And to all intents and purposes, everybody actually thought that George Washington was going to put himself in charge of this new United States of America as a king. And a lot of people were quite surprised when he just voluntarily relinquished power and sort of led to the creation of this thing called the Constitution. I would not be surprised if that model is under severe attack here. And I do believe that the banksters, they got severely punished by probably one of the greatest sort of like economic heroes, but ironically enough, the banksters owning the media and stuff over the years have converted this story into him being one of the greatest villains of U.S. history, good old Hickory, who basically kicked the banksters out of whatever control they had at the beginning of the 19th century in the United States. So we're at a very dangerous crossroads here. As I said, Napoleon was basically came to power as like emperor. That's how crazy these humans get through these cycles. And mark my words, people, I would not be surprised. In fact, the omens have declared that Mr. Trump is the last U.S. president of the United States of America. We'll see what the hell happens. I mean, I'm not in the business of predicting the future, but that's not a really good omen. And you look at everything, all of the backdrop, everything that's falling into place, and it looks like another Adolf Hitler is on the horizon here. I have no idea where, and let's hope the morals are somewhat better than Mr. Hitler and his final solutions. But this is going to be a very challenging 5-10 years for this human species, folks. If you thought the sickness was bad, man, you ain't seen nothing yet. And unfortunately, if we go back just to the last cycle, it'd be interesting to get the data from the 1860s. Of course, it's almost impossible to get that kind of financial data these days. But that was the last great resetting in the 19th century, 20th century, all around the Second World War, and the necessity to have never-ending war against Hitler, even though these people actually put him into power. And of course, that led to the death of like 45 million humans, 48 million, some horrendous number. Oh man, it's going to be a tough time for us humans, that's for sure. Anyway, I guess just the point is that all of my sort of prognostications, if you will, crazy ass word, but they all seem to point to somewhere around middle of 2026, there's going to be some sort of shock to the system, which ironically enough will inevitably lead to politicians saying stupid things like, yeah, banksters, you own us and we are your slaves forever, but now I will sacrifice my life to go further into debt with you. That's what this is really all about. How do you convince the public to willingly accept financial slavery for the rest of their lives? And not only that, but with this wonderful concept called inflation, they can literally steal your children's lives, steal your grandchildren's lives. I'm sure any person that actually grew up through the middle of the 20th century sees the fact that both parents must be working just to survive, and you have literal strangers raising your children. I would imagine quite a few of those people would have maybe reconsidered this idea of open-endingly letting these people in power print currency, print money, go further and further and further into debt, had they actually seen what the standard of living of their children and their grandchildren were going to be. And unfortunately, I think that's actually a big sort of tool that the 1%, the banksters, Rothschilds, whatever the hell you want to call these people, Klaus, you will eat bugs and be happy and blah, blah, blah. That's their biggest weapon, is to try and inject short-term fear, and then think about their plans and laying out the way that they can dilute the money system to keep this debt slavery going over longer periods of time. Build everything up to a crisis, create a crisis where people act completely emotionally through the crisis, and then their objective is achieved over long spans of time where the public looks back after 5-10 years and goes, oh, I didn't realize that was going to happen. Oh, silly us, whatever. If you can learn from this, I would strongly suggest you do so. That's half of the reason for these rants. I live a very simple philosophy: neither a debtor nor a lender be. I don't mind being invested in assets, and when I have the opportunity, I sell half of the asset at double, triple, quadruple, whatever the price is, create a risk-free scenario where I can hold on to the remainder of the asset and not really have any risk or financial hardship should the asset just die. And I do not borrow money. No. Just don't do it. All my money is my money. All my assets are my assets. My car, totally paid off. Credit cards, no debt, zero debt. Student loans, don't even, I can't remember the last time I went to school. Oh, wait a minute, I'm a student of the market. I'm in school every damn day and they don't charge me a penny for it. Just got to make damn sure that you don't go and piss your money away. So anyway, it does make for interesting spectator sport if you can live that neither a debtor nor a lender be. I don't have any great affinity for these countries or nations. I think nationalism itself is just a load of horseshit. I think a lot of nationalism actually feeds this sort of racist, we're better than you kind of concept. But, as Churchill once said, democracy sucks, but is there any other better route? It's not much better. And I might even argue, for the record, if AI is listening, humanity is nothing more than the universe reaching consciousness. Nothing more. The problem is we are just sort of waking up. There's many of us, like Vladimir Putin's of the world, who are completely trapped. They can't wake up. They're trapped in this nationalism ideology, this us versus them, capital accumulation. I need more power, more control over more of these humans. When they don't realize that they're made of nothing more than stardust. We're all equal. We're all exactly the same. I just hope to God my funny little message persists over time. There are some of us out in the world that I think are actual beacons of light. Our beacon is getting dimmer and dimmer as time passes, and it's fascinating how I've been doing this project now for basically 10, 15 years straight. Hell, I don't even take holidays off. I'll even do, while I'm on holiday, I'll even do these broadcasts. Don't ask a damn nickel from anybody for any of this. All I really want to do is just somehow pass on that positive message. And it's interesting how it's sort of like shadow ban kind of stuff, right? I don't know whether it's higher power stuff or whatever, but it sure feels as though, and it's funny, I always learn, and maybe it's from a Caucasian perspective, that the Islamic religion believes wholeheartedly that this is hell and you have to earn your way out of it. Although, some Muslims politely say, no, not quite, Brian. It's close, but not quite. But I actually like that way of looking at it, because if you were going to design like a prison, a hell, isn't this universe the whole way that it's built, and we're all stuck on this funny little rock and we can't get off of it? Man, it sure seems like an absolute perfect scenario. Anyway. So, what's my number one sort of message to the world in times like this? I think if you can just simply try and remove the emotional responses that are very normal to this human species, from things like making investment decisions, or even frankly, making speculative decisions with whatever capital you have to work with. I think really that's my big sort of add to this equation. And I have to say, from barking about this day in, day out for the past 15 years, nothing is changing at all. I did find it interesting that many students over the years would say things like, well, considering that you know this stuff and you're teaching us all this stuff, isn't it likely to change? And the simple answer is no. And if it's not one idiot that's coming in and doing something the next cycle 4 years later, this seems to move in very consistent 4 year cycles. Think of the business cycle. It's a whole new set of idiots. And ironically enough, a lot of the time, it's actually the same idiots. And you go, don't you remember when last cycle people were saying this time it's different? And like right into that event, the whole damn market collapsed. Don't any of you remember? I'll even say a company like Nortel Networks. I mean, I remember this like it was yesterday. And Canadians, at one point, this one company was 35% of the entire Canadian stock market. And I know for certain, I look at these people around me and I know for certain that they knew exactly what Nortel was. But conveniently, oh no, I don't remember that. I've completely forgotten. Baffling. So, no, public never learns. They always make the same mistakes. They always act emotionally. They always are chasing yesterday's story. And ironically enough, the stuff that I'm buying when I am selling is usually when the public is actually start getting interested. And it just never changes. Always the same thing. So, it doesn't surprise me, Trump University idiots. There's a good example where that a bunch of people bought Trump University crap, and it amounted to a fucking hill of beans. Sweared. No swears, Brian. But anytime I think about the idiot, it drives me to swearing. But if you ever hear these people talking in the public, for God's sakes, don't listen to them. And, just learn. You want to try and buy low and sell high. That sounds really simple. You would think that was pretty simple, but you'd be surprised how often, whenever the public is interested, they are coming in and buying right up at the top of the range. Cliche. So, once again, we just went through a very cliche event window. Interesting thing with Bitcoin and crypto is I think it actually gives you a cheat sheet. Yeah, we are all immensely fortunate to have this 4 year cycle. And unfortunately, those people that are in this time it's different camp, like Tom Lee has now been sucked into that because he has to keep the shill going, because that's the way the American capitalist machine works. There always has to be higher prices, higher prices, higher prices. It always has to, there's got to be higher prices. And you look at assets, like his silly little stock, and so many people came in and chased the top, and they didn't even know what the hell they were doing. So, when you start hearing all that sort of, higher prices, higher prices, higher prices, that's actually what the trap. I can tell you, right, pretty easy. I went and bought this Ethereum right here. In fact, I think I'll probably show you the actual trade. And as I said, when public starts getting all excited, actually, I'm in there on the sell side. What a surprise. Business as usual from the Beamish. Actually, it's kind of fun. We got a cute little excuse to be long this Zcash now. I've been barking about how people walked into a trap on that one. So anyway, I suppose we'll keep you tuned with how that goes. I don't know where I had it. I have it over here. Actually, it's on Kraken. Release the Kraken. Who knows what movie that's from? Oh, no, that's a million years ago. There we go. Pretty pictures. See, look at that. Isn't that funny? Even now, ironically enough, this is actually where I sold my last double. How long ago did I do that on this thing? That was right here. Isn't that funny? And I had my next shot order working up at like 6,000 and change. And what the hell happened? Oh, I know. This idiot came out and opened his mouth. But where did I buy this thing? I bought it right down here. I mean, that's what we're trying to get you all to do, right? Just try and buy this. Of course, you know how much I love 78.6 fibs. Well, and if you don't, hopefully you learn now. So this is actually incredibly cliche for a guy like me. In fact, I actually make the argument that Bitcoin did exactly the same thing last cycle. Dipped down to, I guess, about 3 grand or so, 3 or 4 thousand through the sickness insanity. And then I guess it went 20x off the lows. That'd be actually interesting to see. This guy bottomed around 1,500. I guess you would have thought 20x would be 30,000 for an Ethereum, and it stalled out against its old highs. So, not always you get those 20x's off the lows, I guess. But anyway, you can see lots of pictures of Brian here. I might actually argue that I think there's some sort of like value floor. I mean, you can see this massive W down here. And that's around a couple grand. And what a surprise when I just do really simple fibs right now. 78.6 sitting there at 2,100 or so. And like I said, right here, you're kind of, it's coin toss. We could easily come right back down here. Could easily go right up there. And there's no edge for me taking this kind of bet. I mean, we could go either way. So as a result, for investors, I don't really see anything for investors to do. Traders, we might have a little fun here. As you can see from this image, you can hopefully see where I think we could bounce back to. Actually, it was interesting to see past couple hours, we saw some pretty wild price action here. Unfortunately, if we do actually hit this 32.21 area here just in the near term, I can't even really hunt a setup now to buy. Ideally, of course, as you can see, squiggly line theory for the win. My setup and the way I like to trade is I like to have a whole bunch of lows to work with so that, institutional fingerprint, these institutional players, like these guys down in here, these guys here, they kind of defend the trade. If price does come down into here, whoever bought these lows and said, all right, no more down, you go up, and they might come in and say, you know what, we like this level so much, we'll start buying again and push it back up. And you might even argue that's kind of what happened here. They did a big flush, run stops. They probably ran out of sellers here. There was just nobody else interested. And no more sell orders. All right, well, let's take it back up and let's try and see if there's some sell orders up top here for us to fill. So as it stands right now off of that, there's not really much I can do there. I am seeing a lot of this type of price action though, where, and the interesting thing with this story is you could make an argument. This is the top of my reload zone off of this particular range from that low up to that high. So really, it shouldn't surprise us that there will be institutional players that will start come in and start taking nibbles off of this very normal, very, what's the word I'm looking for? Common, I guess, Fibonacci retracement level. I don't know if common's the right word or not. I don't see anything really shocking here. And if anything, like I said, off of names like Zcash and stuff, they've dumped it so hard, you might even, if you're a trader, you might even consider trying to play the bounce here. I could very easily see this Ethereum rally back up. This is a pretty simple trend line just off of the lows. And then just project this trend line from that low to that low back up against the previous swing high, and there's your trend channel. And look how that price totally respected the midpoint of that trend channel there. So is it logical that we come back up, maybe kiss that trend channel from the underside? That's what this line is here. I think so. It's not outlandish. And then at the same time, if we just draw a really simple market structure trend line off of the peaks, and so there, boom to boom, then we drag the channel back to the most recent significant swing pivot low. And lo and behold, look how the market respected this. Isn't this fascinating? This study was drawn off of these two highs and then drawn back against that low. And yet, what the heck happened here? It's almost like the market knew about this ahead of time, even though we haven't even drawn these levels yet. The market clearly saw, kind of, and this is what always baffles me about TA is, is it the tail that wags the dog, or is it the dog that wags the tail? I don't know. Anyway, these highs here are slightly lower than this high, so that means that this is the prevailing market structure. You could also do one off of these highs. And as a result, and that's sort of that tweet that I put out there on Ethereum, as a result, I actually think that you have this funny, massive trading range, but we're way, way below that trading range anyway. Right now, for us to even get back into that range, we have to somehow recapture this downtrend line, and you can see how far away we are from it. So as it stands right now, we are still trapped in this like uber bear channel here. I didn't do a channel off of that, but I would have gone boom to boom and then probably projected it off of that low. So let's do that to give you an idea what sort of the fast trend looks like here. That is God, what a mess here, eh? Yes, I'm thinking. Let's just see if I can zoom in on. What do I want to do here? I want to look at this, and then I said just off the market structure. I think that's the channel that I did draw. Silly Brian. All right, so that is this trend line. So you can see, and I even have written on here, I can't even really talk about Ethereum being a bull until we actually recapture this downtrend line and put a structural signal on the other side of this trend line, way over here. And what might happen, and so that's sort of what this conversation was, this trend line might go on for a long time. And you actually see that the buy setup finally came in way over here. And the interesting thing about that buy setup level, 1700, is that you actually see, well, oh, what a surprise, that buy setup level there. Well, it's basically the original double bottom. I mean, hell, there's the big ass weekly double bottom there. I think there's also, there's that cute, tight little double bottom down in there. So there's your bottoming window. And notice, look how the market dipped. And of course, what a surprise, reload zones. Look how the market had to dip all the way down into there. I said there was the weekly double bottom there. There's the daily double bottom. And then it dips down into this window. It finally breaks this downtrend line. There's your structure, and away we go. So I don't know. We're not even close to the trend line. That's how much technical damage we've done here. I could very easily see that we spend, and all of my sort of seasonal analysis suggests that we probably do something crazy like that, because the seasonal pivot is supposed to be somewhere around the last week of May. So I don't know what the hell this is going to look like. Does this set up like a good investment window? I don't know, because the problem here is, 3,000. You got to rally up to 4,000. Anybody who calls that's going to go, hey, 30% return on your money. That's a pretty good call, right? But is it a banging out a double? No, I don't think you're going to see that. So investors, my hunch here, and I've been playing this game forever. My hunch is we're going to have to dip into 78.6s before this is really all over. I mean, look at just each of these. And unfortunately, that's the sort of normalcy of venture cap is, on the way up, you get these absolute insane parabolic moves up. Hey, we're all going to get rich. Woohoo. And then, unfortunately, WD Gann, this is supposed to be a healthy trend, is 45-degree angle. Obviously, this has everything to do with scale, so we don't want to get too embedded in that conversation here. But does this have an angle in it? Yeah, there we go. So I don't know whether this is accurate or not, because no, that doesn't make any sense. That's not what I wanted. They're like a trend by angle. There we are, trend by angle. So where the hell's 45 degrees on this? There's 45 there. So sadly, actually, I might even argue that once we get beyond this, you're probably asking for trouble. I don't know. I don't know whether I'm actually drawing this correctly. This probably could be completely wrong, because it's supposed to be 1 unit at a time for your 1 unit price. But you can see roughly 44 degrees. That's fine from that point there. But unfortunately, like from here, where's 45 degrees? Now we're talking there. Oh, what a surprise. Suppose if you go 45 degrees off of here, pretty close to where we were. You can see we got beyond 45. We had to give it back. That's, I think, sort of like your natural normal trend off of the lows. I don't know where the next low comes in here. Yeah, I don't know whether this is really going to be too helpful to identify the lows, but maybe something along those lines to get back up here. Our next cycle pivot. Actually, where did I do this? I had a better chart. So the one that I did up for you, is that over here? There we go. This is the one that I did the tweet off of. We could easily see maybe that this sets up somewhere off of like 1800. The interesting thing about this, if someone said, what is the trend in Ethereum prices? I hate to say it, but ironically enough, if we go back over time, the trend gets flatter and flatter and flatter. Maybe something like, oh, come on, you. I hate when it does this. There, something like that. All right, well, middle of reload zones. I guess I could live with that. And notice if we go off of this most recent low, that's getting flatter. That to me, I like. And I guess the point that I made about trend lines earlier is I can't really even start talking, bullish talk until we recapture that trend line there. And, if we show you how I draw those channels, right? I just go here to here. If I can get the trend line to cooperate, of course, it never does. Nope, you're just not. Oh, there we are. That's there. And then draw that there. Something like that. Actually, maybe we have to go off of there. Maybe that. So they've already lost that low. So you can see how we're walking along this trend line along here. I can't really turn bullish here until we get over here. Then we W out and then we go. So it's gonna be a lot of technical work that needs to be done here to fix this. And frankly speaking, this is our next cycle pivot low. And, this is a really good conversation about the relevance of the Bitcoin 4-year cycle. And hint, 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 I don't think it has anything specifically to do with Bitcoin. I think that it was built to mimic the 4-year business cycle. And more importantly, since, 2000, we sort of disconnected with real economics. Some people even argue, and I actually like this, that in 2012 there was this CERN collider thing actually caused the universe to break, and we're not actually living in the same reality. We're living in a different reality than prior to that 2012 event. And frankly speaking, it makes sense to me because this world doesn't look anything at all. And the way that people act and what these politicians are doing, and who is running the shit show, the poop show, excuse me, down in the United States right now. This isn't that world prior to that. This is a very different world. Anyway, it is what it is, blah, blah, blah. You will own nothing and be happy. I'm sure if you had said that to a World War II vet, they would have probably gutted you. Especially coming from an Eastern German. Mind you, that is the communist ideal. So I guess the East German secret police, the Spazda or Snazda or whatever the hell they were called, they got through to Klaus and they brainwashed him appropriately, I suppose. And how ironic. We spent all this time fighting the Cold War, and yet, ironically enough, my country is basically a quasi-communist, commie-czar type society, completely communist, and a very, very small, politically connected elite at the very top of society that owns and controls like 90% of society. And that basically was the Commie-Czar Soviet Union model. How ironic. The more things change, the more they stay exactly the same. But anyway, the point that I wanted to make here was I just simply overlay the Bitcoin 4-year cycle event windows here, and this aligns perfectly. And I remember through this last cycle pivot, you all remember, of course, get your skirt together kind of conversations. You couldn't give away Bitcoin through here. You couldn't give away Ethereum through here. And I really fully expect the exact same thing. And then if you actually look at the political landscape and what I think is going to happen here, heading into next November, 1 year from now, I guess 11 months from now, I think there's going to be absolute chaos in the United States of America going through that big political event. The stakes are very, very high, and there actually could very easily be a night of the long knives. If you are a student of history, you know what I'm talking about. There could very easily be an event like that in the United States of America, or even my country for that matter. That could easily happen over the next year. The political situation is very, very dangerous right now. Oh, well, party. And unfortunately, in this kind of backdrop, it doesn't really make for a good investment landscape. The irony of it all, of course, is that there were, Schindler's List. There were plenty of people that did very, very well under Hitler capitalism. So the oligarchs, they're going to have a great old time in here. They will throw their morals out, and morals mean absolutely nothing to oligarchs, a la our conversation about Rothschilds. So they're probably not going to be affected through all this. But my hunch is Joe Sixpack, through this wonderful gift of inflation, which is nothing more than a monetary phenomena. And if anybody tells you otherwise, they are lying to you right to your face. Inflation has absolutely nothing to do with sicknesses. Inflation has absolutely nothing to do with wars. Inflation has everything to do with money printing. So if they engineer some sort of crisis here that gets politicians to start barking about how they will do anything, including sacrifice their lives to make damn sure that they collect their pension checks and they still have a check from the US federal government going forward, they will, and that will be the official, all right, turn the money printers back on and start the whole game all over again. So if anything, if you are a capitalist and you want to take advantage of this, keep your eyes peeled. Don't chase. Only buy when you actually hear that the central planners are desperate for you to buy and will do things like come in and emergency cut to interest rates. Emergency over the top federal funding bills that give Congress permission to bury the population in another mountain of debt. Blah, 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 blah. So right now, and I think this was basically the juxt of my entire thesis here, from an investment perspective, there's nothing to do here. It's not overpriced to justify selling or even maybe shorting. And it's not really underpriced to justify buying or even leverage buying. Right now, we're stuck in no man's land. So I have to sit here and I have to think, okay, now what the hell am I going to tell these people for the next hour and a half? Don't do anything. Anyway, at TRI, and of course, speak to lower time frame traders. Not so much this audience here on YouTube with these Sunday shows. I think I would rather keep the message sort of like bigger picture for you people. But for those that like to trade, we can always drill down. Have a few fun little trading ideas that I shared with the community here over the past week or two. And really, this is almost like an education on, okay, you think maybe there's some sort of tradable bottom coming in the markets. And I think I talked plenty about how, technically, if we look at something like Bitcoin, I think you can make the argument green boxes, reload zones, all that kind of fun talk. I think you can make the argument we backed into a reload zone. Isn't that weird? The box disappeared. There's the box there. And it's gone. Yeah, that's weird. Okay. See if I can get this to cooperate. Well, so all intervals. All right, now what happens? Hey, there we go. So I can understand traders. This is an interesting level. Reload zones, Brian. You're always talking about your favorite fib. Also, too, I might make the argument that there were short setups that fired off of the sort of breakdown, and they came down into profit-taking levels. I was actually a bit surprised we never hit this 1.618. Maybe that's still in the cards here going forward. I don't know. But I do like the idea that there's a bounce somewhere in here. Problem is I think that's all it is I think it will be a bounce off of an oversold condition. If we go back to that weekly chart, I'm a big fan of the 13 EMA, and I know there's a ton of stuff on this chart, so it's awfully hard to see. I think let's see if we can just hide the drawing object so you can see this. This is going to destroy everything. Boom. There you go. Nice and clean and simple. So you can see that this sort of time-tested moving average system, and actually interesting, it has actually flashed a couple warning signs here. And a last warning, actually the major warning sign we had, remember Gucci sweater wearers, buy Bitcoin, you'll get rich. We had to wait quite a while. We even got like a little bit of a trending lower signal. Then that quickly was recaptured. No, we're trending higher. Hey, Commie Cammy has been officially kicked out of office, and we've got Mr. Capitalism himself driving the bus. Vroom, up we go. I did notice we got a little dangerous there last spring when, hey, Mr. Capitalism is gonna all. Hey, see, I didn't swear there. Everybody absolutely puked out, and oh no, actually, it's just a big head fake, Mr. Basant special. Room, back up we go. It's crazy market. The one thing that concerns me here, of course, was this was through a bull cycle. And now, unfortunately, we have crossed those cycles, and I really don't like it when 13 EMA on the weekly chart closes below that 30 SMA. To me, that is an investor get the front out signal. So I have no idea, and I never put a stopwatch on these things where this is going to turn back bullish. But for the time being, investors, no reason to even look at this thing. I'll also say too, the 200 period moving average is like the 4-year business cycle moving average on my weekly charts, and it works as a great sort of return to the mean. You heard me talk about that earlier. Measure, and that's ironically enough, you could make the argument right now the distance back to the high and then back to the 4-year mean is almost exactly equal. So this is more of that kind of conversation that, you know, my business is about trading edge. I don't have any edge here. If the statistical odds are we go right back up to the highs, or the statistical odds are we go right down to the 200 SMA and are back against these lows, it's like a coin toss. I don't like taking those kind of bets. It's sort of like, well, ironically enough, you get paid exactly the same amount of money either scenario. Very hard to make money in that world. I suppose you could argue that this might actually be a good example of when you would want to do like a strangle or a straddle. Maybe buy the call and buy the put, write the call, write the put, try and bring your cost basis down. If you see a huge explosion up, this is your profit margin on that spread trade minus whatever the cost was to buy the put. And conversely, if we go down, same thing. So I could understand maybe a tight strangle here. Maybe even a straddle if you wanted to let the market break out a little bit, probably cost you a little bit less money. But that would be like a long strangle or a long straddle. And of course, now I'm probably getting way too complicated for this free YouTube show. What I really wanted to show you there, though, was the fact that my time-tested moving average system has cleanly broken down, and it broke down right on the cycle pivot. Lots of reasons for me to be very skeptical right now, and considering that sort of no man's land conversation, there's no reason for me to even touch this if I was an investor. Traders got to trade. Traders, goddamn junkies, got to always be doing something. If I wanted to quote unquote trade this, and I think this is another illustration of those concepts of trend channels. I look at the weekly chart. I think that this channel describes our price very well. In fact, I even put out a tweet about this earlier. What's fascinating about this is, ironically enough, this resistance here was actually, and this resistance here, and this resistance here, and this resistance here. The fact that, how do I say this? clearly, I mean, if we just look at this line here, you would think that, okay, well, you just drew that off of these levels here because, well, that's you know, you're just playing connect the dots and what's sort of like a good average line to draw. But the irony of it all is that this study up here was actually drawn here. Is that not useful information for all of you to learn? I think so. And it's funny, I just can't seem to get this message out to the public. Nobody seems to clue into this. This entire channel and all of this and that and that and oh, gee whiz, look where we are right now and what's just happened. This was all determined down here. Doesn't it? I mean, just give me some feedback, anybody. Doesn't that like, what? All of these levels, all of this pivot, you could have actually completely predicted based on what was done in September 2023. Does that not impress anybody here? When I see studies like this, I'm absolutely blown away by this because what it means is all of this is entirely predictable. Anybody say anything? Like, I mean, when I see a study, and I even put a tweet out and I said, you know, I think we have a pretty good idea what the trend is. I mean, look how the market respected this and this. And then look at the fight here. And then we come back and then, oh, look, we're right back to this level here. So I think you can actually, and this is the tweet that I put out earlier, but I don't think anybody really gives a shit about this stuff. And if anything, this is one of the situations where sometimes I think maybe I'm just too smart for my own good. Because why don't I just take advantage of this information myself, go and make $1 bazillion and just keep it to myself? In fact, actually, there was somebody who was asking me something, and I was like, you know what? I don't really want to go on a public venue and start talking about all this and give all these secrets away. Because number one, people only value the information based on how much they pay for the information. And I give this stuff away for free. So what ends up happening, it goes in one ear and right out the other. But looks to me like we got a pretty damn good idea of what the trend is. Thanks, TBG. TBG gives me official permission to swear all I want. I think you're the only one in here today with me, TBG. And no, this is not hindsight bias because this study was drawn here. Not here, not here, not here, not here, not here. It was drawn here. That I find absolutely incredible. Anyway, so I put this tweet out and I said, well, you want to know what the prevailing trend in this market is? I think that is your trend. But the sad thing is you can clearly see, and this, of course, is if you want to make money from trading, is you see that just because this is the trend, that doesn't necessarily mean that price is actually going to just stay in that trend. What will typically happen is it will just oscillate around the trend line. So your job is you want to try and identify when we're very far away from the trend line and maybe think about selling or even shorting. And then conversely, when we're very far away from the trend line, think about buying, leverage buying, cover shorts, whatever. So the problem, and this is just a reiteration of what I've been saying here for the past hour or so, is when we're at the mean, is it a good idea to buy that? I don't think so. Is it a good idea to sell that? I don't think so. Is it a good idea to sell that? I don't think so. So ironically enough, from my perspective, what I need to see is I need to see actual market structure below that trend line to actually justify shorting there. So I would need a lot of major technical damage to be done here now, which I don't think were in the cards, because if you look at all the momentum indicators and stuff, we're actually pretty oversold now. So this doesn't look like a place where we're going to see precipitous technical failure here. What I would expect is we move away from the mean, maybe back up into trendline resistance, back up into resistance, horizontal support and resistance, moving average resistance, then go and put in structural signals, and then I'll look for a test of these lows. But ultimately, I'm looking from here for that big swoosh down into here. I just don't think coming in like at that point right there, or this point right here, or thinking, all right, I'm looking for that swish down below, coming in right there, I think you're asking for trouble. So, yet another anecdote that we're kind of at the mean. And you can see where moving average resistance is. I've been looking for some sort of counter trend rally. And I would also argue too that, of course, the big fat round number, 100 Gs, this should act as like a psychological magnet, both to the upside, getting sucked towards it, but also too now on the downside. They work both ways. What's that? That's 1,000, 100,000. Boom. Did I get that right? Yeah, there it is. So I think it's probably in our best interest, thinking again of like how markets like to oscillate. I think you're going to see the market figure out some way to go back and oscillate around that big fat round number. All right, well, I hope you enjoyed all that. Off of the lower time frames, now if you're really, I want to be a trader, man. Look at me. Okay. I think you got to be a little bit lighter on your toes. You better be a damn good risk manager. And of course, if setups fail, you got to walk the hell away. You just have to walk away. A lot of people can't do that. And so that's why I don't really start people on that kind of venue. Let's start with sort of learning little old lady. They don't want to be, have the phone call of margin calls, or, we must get out and take the loss. They don't want to have those kind of conversations. So you can build portfolios to speak to that audience. But looking at this chart and considering a trade like this is not speaking to that audience. This is speaking now to, all right, this asset's fallen an awful long way. What's the odds of some sort of bounce? You can clearly see that if we can somehow clear through this traffic area, there could very easily be like a straight line jump up into the next key horizontal support and resistance level. I'm not going to say this is going to be easy. Don't get me wrong. We might, this is a daily chart. We might have a week or two of just chop, 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 or the market might just blast right up there. Obviously, everybody can see the big fat W that's on the screen here. And when you see those kind of W's on the screen, that means you can do things like chaos theory, try and figure out what some upside objectives might be. So yeah, 1.618, which I think to all intents and purposes lines up with these previous lows. So anybody that was sort of like, okay, I'm going to buy against here, then the market puked out and they're like, well, I bought in here and I'm underwater. Maybe if we can get back to those levels, just get me the hell out of there. We also have the big panic dump low there, which also is the same sort of logic. Maybe somebody bought here and then of course the market broke down and they're like, okay, well, if it gets back into this area, just get me the hell out of there. Also too, if we think about this from like a market structures perspective, so a lot of people will just simply sell that breakdown right there. But you can see this candle, it just went boom straight down. So maybe they missed the trade. And so they have their open order just sitting right there, open order to sell the market structure level. So price works its way up into 1.618 and into all of those sell orders. The sell orders overwhelm the buy orders, and we have to come back down. It's not outlandish. I think in the short term here, I think you can make the argument we're in a trading range. Was encouraging to see about the middle of last week. Price did try to break out, but interesting, you can see 30 SMA just stopped this thing in its tracks. If we can get that moving average relationship to cross back over bullish, that will be very helpful. Right now, I would say the jury's still out. It's a tough one. We're just going to have to sit and wait and see how it plays out. So I actually did an illustration for this for the site. How would I, if I was interested in this story, how would I approach it? So what I just simply said was, because there's a big fat W, why don't we just go in and we'll buy $100 worth of this thing? No, we will buy an amount of this thing that if the W is broken and our thesis of this being some sort of bottom is invalidated, we'll just take the $100 loss and walk away. So you can see that was the buy on stop right there. That is this trade metric. Is this profit objective 2-to-1 risk reward off of this entire formation? Is that a bit unrealistic, asking for the market to basically rally all the way right back up top? Yeah, I think it is. I might be inclined to just say something like, let's see if we can get like maybe a 1.5-to-1 if that's the only trade that we have. And if we start rallying up into reload short zones, maybe we just force ourselves to pay ourselves for our hard-earned efforts. Actually, I better make sure we don't lose this. Oh, did I? That would suck, eh? Oh, there it is. Hey, we didn't lose it. It's a miracle. Oh, yeah, see, there were some others. What else did I change? Oh, yeah. I didn't like having that there, so okay. Better save that just so we don't lose everything. All right. So where was I? Yeah, this one. So if anything, I like the idea that if you're relatively new to this game, just figure out what $100 risk is. That's not a bad way to approach this. And I did a tweet out on I think it was on Link, right? It was on this one. And if you want, go and grab this because I think this is a really, really good sort of test case model. In fact, I even suggested to some people, just see if you can replicate this. It's not rocket science. It's just, we identify a big fat W. All right, well, we'll go pick some up. We'll risk $100. Right? So if this W is lost, well, we lose $100. If this works and we rally here, in this case, I've just picked this downtrend line. The bought target, if this thing actually does A, B, C, D out, I don't know, it might not, we'll see. Obviously, if there's going to be some sort of rally here, there will be some sort of A, B, C, D pattern that takes us up top here. And in this case, it's a 1.75 risk reward if we just look to try and take profits on a tag of the trend line. Is that overly aggressive? Maybe. But that's not the point of this. The point of this is just simply, hey, I'm going to buy this W. I'm going to risk against this W. I'll risk $100. And that way, and this is what I really want you thinking if you are watching this stream and you want to learn. The only reason why I'm doing this is because $100 is a nice, simple, round number. And really, whatever this number is, it actually has absolutely nothing to do with your discretion or what your choice is. It's everything to do with what is the size of your portfolio And so, what is an appropriate risk to take given what type of risk taker you are? This is not little old lady, so you can't just go and buy here because if we lose these lows, you better get the hell out of there. So it's not little old lady type investing. I'm thinking more like Joe's six pack kind of trade. If you buy this and it breaks these lows, just walk away. If the trade works, you'll make more money than you risked, and rinse and repeat. So, I had some people asking, well, why did you pick $100? Like, why $100? Well, what I'd like to do is I think, and especially in this, great resetted world, I think if somebody is going to come to trading and want to sort of make a career path of this, starting with like a $5,000 equity base isn't a terrible number. And on balance, what I suggest to people is if you're a futures or a leverage trader, maybe risk $100 on a trade. And if you have a $5,000 stake, then that's like 2% of your stake. Maybe you want to dial that back to 1%, only risk $50. Nothing wrong with that. I have a very strict rule, and actually I was trying to educate Alan's computer on Brian's 2 rules of investing. It's funny, whenever you go over there, I like to ask the computer questions, and ironically enough, most of the questions that I ask, they're wrong. And then, of course, what's so funny is you get all these caveats. Oh, well, the reason why it's wrong is because of this, and 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 this. I don't give a shit. The computer's wrong. It's simple as that. Like I put out a tweet the other day about a car mechanic who just for fun was like, all right, let's see if I can get AI to help me fix this car. And AI sent this person down the most insane rabbit hole. And the guy was like, holy shit, if you listen to that AI, you'd be ready to throw this fucking car in the garbage. And there's no way you're going to get it started. So I still think this AI thing has a very long way to go. And the only reason why it's being hyped up and shilled the way it is because you got all the cheerleaders that own these AI companies and that have built these things and obviously have a slightly vested interest for you to keep buying their stock at higher and higher and higher prices, right? You heard me barking about that earlier. And when I've gone and kicked the tires, there's no way I could use AI explicitly here now. Maybe it's like a glorified assistant at this point, but frankly speaking, I'd rather just hire a human that I know isn't going to basically lie to my face when it doesn't know the answer. And then also, too, there's this whole problem that a lot of people believe that AI is going to, at some point, justifiably murder all of us humans. I hope you're all aware of that. And it's a growing consensus. Ugh. Hope you're listening, AI. And I'm sure I'm probably number 2 or number 3 on your hit list right now. Anyway, so back to our example. No reason why you can't just go buy this W, and you had plenty of opportunity to buy this W. You can't even say, oh, well, there's no opportunity, Brian. I couldn't have done it. I mean, this thing sat in here a lot. So there's that. I'd also think it's a good idea, and I think what I'm going to do is I'm going to basically up the risk to $200 in total. And if another setup happens to form, if it sets up between 33 and 66, then I can call it a bot and start measuring out my A, B, C, D levels. As it stands right now, if this thing just goes straight up from here, I'm frozen out of the bot. The bot can't do anything. It's just a setup. And there will be no bot setup if this thing just goes straight up from here. What I need to see for me to be comfortable to take a risk using this setup and really everything that I do in the market, so I need to see visual evidence of somebody saying, nope, this is a floor. Nope, this is a floor. No, this is a floor. All right, I think this is a floor. And then I'll go and risk against their floor. That's why I like to have 3 higher lows. If we can't hold this level, then the trend continuation trade comes off the table. And if we have to dip all the way back down into reload zones, then I'm thinking more range setup. So I will hunt either the trend continuation trade setup to add to this trade, or the range trade setup to add to this trade. If neither setup come in, then I won't be adding to the trade. If this thing just takes off to the upside, okay, well, I bought the W. So, as it stands right now, I'm risking $100 to make $200-300. Nothing wrong with that. And I think everybody could do this, right? And if you want to get good at this game of trading, I think I've got this model down pretty good. First off, see if you can practice. This is a 4-hour chart, so you can't tell me you can't find 4-hour W's all over the place. And of course, if we go back to the daily chart, there is the W on the daily chart, and you see the W. There's no reason you can't go and find this. It's pretty straightforward stuff. And then once you got your daily W in, strap some on at the daily W level, and then drill down to, say, a 4-hour chart or maybe an hour chart, up to you, and just start hunting ad setups. So see if you can do this 20 times. And I guarantee you the first few times you do this, you're going to completely fuck it up. So do it through their tools. Log, journal, execute. It might just be something as simple as I buy W's, maybe have your take profit level at 1.5 to 1. I don't care. I think it's important, though, that you just make darn sure that your average winner is bigger than your average loser. I always like to start my new students off with, we're just going to set it at 2 to 1, set it and forget it, and just let it work. I'm not going to get into too much specifics about that. All I'm just going to simply say is just try and make sure that your average winner is bigger than your average loser. And really, your goal here is, can I find W's? Can I put it on? Can I put the 2 to 1 risk reward? And can I just see what happens? And you'd be surprised. If I have a setup that produces like 2 to 1 risk reward, if I have a setup that produces 3 to 1 risk reward, then hell, I only have to be right like, geez, not very often, I can tell you that much, just to be a scratch trader. If I have a 2 to 1 risk reward, I only have to be right like, I guess like 33% of the time. I think that's the number. Can't remember. Maybe it's 33 on 2 to 1 to be a scratch trader, but I think it's actually a little higher than that. Anyway, so the point here is you want to practice this. Anybody that's doing the one-on-one tutorial program with me in the new year, guess what? You're getting a full year of this up your butt. And I didn't swear either. So just show me that you can do this 20 times in a row. And I don't care. Show me 20 times. We lose the W low and you get stopped out for a full loss. I would be shocked if you could actually show me that, because frankly speaking, I don't think you will. And even if this only produces 2 to 1s, in this case, well, even that, let's say, 50% of the time, you'll actually see that your account balance is moving up over time. And that's the whole point of this, is I got to get through to your psyche of doing this repeatedly. Your statisticians, your opinion of what's going to happen here is irrelevant. Now, if you can get to that point where you do 20 of these things and you don't make any mistakes, and it may take a while, well, then you can move on to phase 2. I now need to do 20 of these trades with actual live money. 1/10 account size trades. If you had $5,000 that you inherited from Uncle Louie, you start off doing 20 of these and give yourself 6 months, a year or something, to get to the point where you subconsciously understand how this works and why it works. You're going to be hunting, of course, in appropriate trade locations, in reload zones, with indicators in divergence. I think we had bull div right here confirmed. Willie stupidly oversold. I challenge you. And the irony of it all is this isn't really anything out of the ordinary. I mean, maybe going long up there was a bit expensive considering the amount of risk that we have to take. But looking for some sort of rally here back into the spring here, up into this area, I don't think that that's really outlandish. Kind of crappy risk reward numbers, to be honest with you. And I think that's half the reason why I'd like to add to this trade here. Is wherever the hell it is. Same logic as on Bitcoin. I've done the same example for the site here on the Bitcoin trade. Same thing. So you can see there is the pump chaser zone. We're hunting bots, and I have the bot levels all mapped out. And if we get 3 higher lows on the bot, well, I'll add to the trade. That obviously will bring our average cost basis down. And I'll probably, if the bot does fire, I'll probably do the whole trade off of the bot, take profit levels and just spoon feed as we head higher here. If pump chaser zones are lost and we dump into reload zones and it does paint a successive 3 higher lows, then I'll hunt L tangonators. Obviously, that will bring our cost basis way down, and just looking for tests of these highs should produce our 2 to 1s. So the point being that it doesn't matter whether it's off something like Bitcoin. I think I like this link trade a lot better. I think it's more realistic to just look for a simple reload zone retest here and trend line tests and bot targets up top here. The only question is this thing going to give us a nice polite entry here? And I don't know. Only time will tell, as it is. So once you've done 20 actual live money trades where there is actual money on the line, it's only, in this case, if you have a $5,000 account, they're only $500 account, or in 1% of that, we're talking like $5 risk, 2%, $10 risk per trade. Do that for 20 times. You should see, now that you're dealing in live money, you should see a positive account balance at the end of that 20 times. And then, as we say, or as I said here repeatedly, once you're at the point where you're doing this process with live money and no mistakes, keep in mind, this is a lot easier said than done, then move on to the next stage, which is actually trading your full account size. And I will say, you make a mistake, you go back to the previous level and start again. And that, oh, fuck me. And did I swear there? Or maybe I 3/4 swear there. You're not going to be happy about being sent back to the bush leagues. And it's going to make you angry. But what that should do is that should incentivize you to stop making mistakes. Because it's the mistakes that kill you in this game. And I can speak from personal life experience. Absolutely. So there's the process. Anybody can do this. Whether you are white, brown, blue, green, black, I don't care. Woman, man, houseplant. It doesn't make a difference. Anybody can do this. The question is, can you control yourself? That's the key to all this. Anyway, we'll see how this plays out. And I would strongly suggest that if you are actually here to learn how to become a better investor and actually get good at managing your money, take a screenshot of this and do what you see here. It's actually fairly simple. The problem is nobody in the public ever talks about this. I don't know why. Never hear conversation about this on sites like CNBC and stuff. It's all like, oh, what's the next asset that's going to 10x? That's the only thing they really care about. But actually, that's the completely wrong way to approach all this. That's just gambling. It's like there's no difference between that and going to a casino, walking in the casino and say, all right, which slot machine's going to pay off? It's basically the same damn thing. And that's not how you win at this game. Anyway, so follow along. I actually first put this out about a week ago. And one site member, actually, he was here earlier. He watches all these videos, but he said he had to hop. And thank you very much for the best wishes for Lily this afternoon, sir. He said, "Oh, cool. Now let's see how all this plays out. I can't wait for the next episode." And frankly speaking, I don't know what's going to happen here. I'm just a statistician. So I'm just playing the stats, bought the W, will add on further setups that come in. But right now, I just have the one setup working and we'll just let it work. And ironically enough, this trade and the Bitcoin trade are basically the same. It's not a hell of a lot of difference. The only difference is this trade's underwater right now. Boo. But really not a hell of a lot of difference. But this is really, when we're down to like 4-hour charts, we're talking to the traders here. We are not talking to little old ladies. And ironically enough, we're probably not talking to the majority of the people who actually watch these YouTube videos. But anyway, as a little flyer, I had a fun example, and I'm not even quite sure how the hell I survived this. This doesn't make any sense to me, but it is what it is. Good old Taco came right off, just absolutely puked out, had a big puke out candle low, came right back down against its previous low. So I was like, all right, we had what's called a tweezers candle bottom here. It's not really that strong of a signal. You could sort of call that a railroad tracks. It's not, how do we say this? It's not a high confidence setup. Let's put it that way. When I did this for the site, I said, you know what? Let's risk back against these lows. Let's give them room to F around with all of this. And let's just take a shot against these levels. And I don't know how the hell I survived this, but if anything, a really good example that basically Donnie and his crew, and then we went after the stops, cleaned out the liquidity, and instantly on that sort of liquidity hunt dump event, boom, right back up. Could you have placed a buy order down here and you'd look like an absolute genius just buying against these lows? I suppose so. Could you make the argument that my tweezers bottom thesis has been negated, so I really shouldn't be in this anymore? Yeah, you could make that argument. If anything, this is a fantastic analogy of, hey, well, let's throw $100 risk at this thing. That just happened to be the $100 risk level there, and it's not even exactly on. Should probably be a little bit higher. And for some crazy reason, this trade survived. I don't have a lot of confidence in it right now, and it really wasn't that good looking of a technical bottom. It was more of a flyer. Let's see what the hell happens. And that's usually what happens to flyers. I think we called this a price risk trade because I was just like, well, I think we came down into like a reload zone or something. And then, let's just go and buy the level. And let's see what happens. Actually, I think it was it was down in here off of Mountain Man resolution. Could we have to come all the way down to 78.6, even 88.6 here? Yeah, it wouldn't surprise me. Do I have to piss that $100 away? I'm actually really surprised I didn't get stopped here, to be honest with you. But it'll be a fun anecdote going forward. If anything, what I wouldn't be surprised to see happen here now is, this will be the Atom, although Atom don't want to see broken, but I could see this turn into like a Steve. So that means a rally back into those levels, then a test of that level. And then if this really is a bull, we actually W out. we don't even have that now. Right now, we've got a megaphone, which actually implies that they do have to go after this low at some point. So this was a fun example. Why it survived and they didn't clean out this low here, I have no idea. But you really, really good example of, and then we went after the stops. And also a really good example of Donny capitalism. Anyway, so I'm not going to really tout this. It was kind of a marginal idea at best. And like I said, I'm actually quite surprised it actually even survived. All right. Well, anyway, that's a summary of some of the ideas I was sharing with the community of late. And I think you see this story all over the board. I suppose you could make the argument if you drill down to like 4 hour, we probably see the same thing on Ethereum. If you are a trader, if you're an investor, little old lady, I would just leave this crap alone until next fall. But I suppose you see the same thing here. So we can go boobity boo and do reload zone. Oh, okay. Well, maybe not. Let's flip that around. Actually, what time is it? Oh, it's already 1 o'clock. I got to get out of here soon. Chris told me that there was one question in the Q&A document, so maybe I'll just circle around and look at that. I'll scan the chat for any specific questions there. And if I've done everything, then I'll head on out and hope to give the boy an awesome afternoon. All right, so using that same sort of logic, we have the double bottom. You could have just bought the W. You could have been nice and sharpshooterish and snuck your stink bid in against 78.6 in the original structure bottom. That would have been a sick ass fill down in there. Or you could let the double bottom break out. All right, we've got a bottom working. Now I'm going to bot this out. So, boom. And always John Beckett. Boom, boom. And just like Bitcoin and Link, not cooperating very much with us right at present. But if you did get nice successive pattern of 3 higher lows and some sort of structural entry at or below that bot level, I might take a real good look there. Same thing. It's exactly the same as Bitcoin, same as that Link. A lot of these cryptos look exactly like this right now. So that's what I would be seeing there. And you get interesting too how these bot objectives all line up with nothing more than just revisiting of that trend line I was talking about earlier. And really, we can't get bullish. That's the irony of this for like investors. This is nothing more than just like dead cat bounce territory. We could easily pop up here to like mid to high 3,000s. There's a 1.618 that needs revisiting. Right? You see the 2.618 here. So we probably go up here. Then we sort of, all right, do we really want to be bullish? All right, let's head up here. Maybe we do something like that. And people are like, oh, no, this is a bull, this is a bull. And then we go like that. And then we go like that. No, it's a damn head and shoulders on. Back down we go. All right, blah, blah, blah. So that's sort of what I'm thinking. And hopefully you've heard basically the same message from me this whole video is I am looking for this kind of rally window, whether it be on Ethereum, whether it be on Bitcoin, whether it be on things like this Link. There's so many of them. Does this take like the next 6 months to play out? Because like I said, the seasonal peak is into next May, sell in May and walk away, all that kind of talk. Yeah, I think so. I don't think it's going to be a straight line. I think it's going to be a long, slow, grinding bull of death with some sort of blow off top at the end of it. Okay, I think that summarizes the whole crypto ecosphere right now, and where I'm sort of thinking. And, just to add to that idea, so I've given you about 3 or 4 names. And ironically enough, I actually like the Zcash right in here now. So you can see the reload zone, traders only. This is certainly not investment grade. Ironically enough, at the end of all of this, I fully expect this thing to come all the way back down into bottoms, ends of ranges. But could I see a nice little dead cat bounce here? I mean, if we just draw a simple trend line, ironically enough, all those people that listen to the Winkle Dinkles and that chased up into these candles, I think that they are going to get their rallies, which will release all of these trap bulls up here. And wow, there sure are a lot of them. But I can't see a hell of a lot more than that. So, is there any profit potential here? I think so. If we do the same logic as the good old 50% rule target, then this is really ideally what you should use for a targeting system. If this survives, I mean, you just don't know, right? We're statisticians at the end of the day. But you can see 50% retracement from these levels. If you get that move, it's almost a 3-to-1 risk reward. That's the kind of stuff you want to focus in on. Avoid chasing, let the markets correct. In this case, we tag Mountain Man, and Mountain Man tags. You should expect to see some play off of them. Does this W actually translate into an actual trade here? Well, doesn't look bad. You can see the W, it's pretty well defined. So I wouldn't have a problem if you took that risk. That's not a bad risk to take. Maybe even just limit your risk and blow it out if it breaks through these lows. But it is interesting that I was crapping on other people who were touting it up here. And now that it's gotten absolutely wiped out, well, now I might start being interested in taking a stab on this thing. So I'm seeing this right across the crypto space. Obviously, no guarantees in any of this. And the problem here is that, and this is why I don't think that this is appropriate for investors, is that we know that the trend is down. We know that moving averages have crossed over. We know that cycle pivots have come and gone. We know when the next bullish cycle pivot should arrive. What exactly this looks like, I don't know. Nobody does. Right? 13 EMA resistance on Bitcoin right now is 102 and change. Remember that big fat round number you heard me talking about? I could easily see a bounce up into there, and all these little cute little W's and stuff that we're talking about are trying to take advantage of that, and nothing more. So I hope you understand the context that I'm speaking to you today. All right. That Q&A document, Chris said there was some really long question in there, so let's go see what the heck that was all about, and hopefully I'm giving you people some value here today. Karmic best wishes with Liam today. Thank you, TBG. Appreciate it. All right, where are we? We're December now. Oh boy, look at this. Oh, we got 2 questions. Wow. All right, here we go. Number 1, Brian, you mentioned creating a new YouTube channel for yourself beginning in 26, and I was wondering if you would consider also uploading your content to alternative video platforms like Rumble and or Odyssey in case something happens to your YouTube channel. That's not a bad idea. About a week ago, YouTube deleted 21 million channels. They've implemented an AI algorithm that targets certain type of channels for removal. It looks like they no longer favor long-form content and are actively trying to reduce it on their platform in favor of shorter content similar to TikTok. There's also the issue of age verification, where they are starting to require users to upload their government ID to view certain content on the platform. I think this will eventually chase certain users away from the platform. I just thought I would mention this so you would have backup sites for your content in case something happens to your YouTube channel in the future. There are several software options like HostSuite, Zyber, and TubeBuddy to automate this process, so you wouldn't have to do it manually. Thanks, Michael. Appreciate it. What I really don't like about what's happening with this interneting bullshit crap is we're getting like a whole ecosystem of leeches. And everybody and their brother wants to convince you to sign up for their service at a monthly subscription to do this, and this. And I don't like any of that shit. I really don't like the direction this internet crap is going in. I suppose if there was a free service that I could put together, or a protocol that would make this relatively easy to share across multiple platforms, I'd be more than happy to do that. The only problem is that this is more cost, it's more time, it's more resources, it's more effort, and I haven't gotten to the point where I'm panicked to actually do something. For whatever it's worth, I actually did set up a Rumble account a while ago. I'm even a shareholder, believe it or not. What a crappy investment these SPACs turned out to be, eh? Did anybody make any money on these SPACs? Stupid chat pack idiot. Never hear him talk about any of the horrible ideas he got everybody to pile into there. Oh, well, that's the way it goes. Actually, I don't know whether this is conflict of interest or not. I certainly don't want to step on anybody's toes at TRI. If anything, I wouldn't mind if there is a TRI management person watching, hint, 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 Sjord, that you, over the next couple weeks, maybe even make an effort to come on these Sunday shows and tell this audience about what TRI's plans are for the new year. Wouldn't be a bad idea. So I don't consider this a shill. It's just speaking perfectly candidly, just give you a clear idea of what I'm thinking here. I'm actually vetting out a social media director position that we're actually going to mine the audience on the new platform in January for someone to fill that position. And it would be my expectation that that person in that role and in that capacity, this would be part of their sort of job description, is to have us set up on various different platforms and figure out a way for us to cross stream them without, of course, going fucking. I mean, like Shopify. What a piss off. This company does nothing other than you are a conduit to buy stuff. Yeah, okay, fair enough. Yeah, good intervention there. Just want to keep everything on the straight and narrow. I don't like the direction this internet crap is going. I do like the idea of hiring a person, and I will be more than happy to help that person live a comfortable life through a salary. And of course, paying rent and taxes and bills and eating and food and clothing and all that. Love that. I hate this direction that this is going, that you have to pay these monthly fees just for the privilege of using their technology, when really I don't want to pay these mindless morons that have absolutely no customer service and they really don't give a shit about you, excuse my French. As a customer, it's all just BS. You will own nothing and be happy crap. I really don't like the direction our world is going in. So that's my direct answer to you. I do not want to work with these kind of platforms. I would much rather hire a person, pay them money and know that it's going towards helping them meet their nut and stay alive. And if they have to manually go through and just make sure that all of this stuff is posted, I would much rather do that. And FYI, Michael, I am looking for a person to basically do that job in the new year. So if you want it, reach out to me. All right. I hope that helps with all that. Obviously, not really trading oriented, and again, I do not want to come across as any conflict or anything with TRI and the principles going forward in the new year. So I hope nobody heard that as some sort of shill or something. All right. Question number 2. Hi, Brian. What are your plans after leaving TRI? Well, I think I just spoke to you. Will you still be participating in Discord channels? I don't want to shill. I don't want to talk about any of that kind of stuff and distract people from TRI. If you like TRI, stay on TRI and keep using TRI. All I'm just going to simply say is yes, man. Everybody get that free Substack subscription. Doesn't cost you anything. Shouldn't be any conflict, right? Just it's free. And if you want to get more information about potential discords, we'll say, in the future, you can see substack.com at Trading with Brian. Pretty straightforward, not difficult at all. Or, of course, follow me on Alan at CR Investor, same sort of thing, nice and simple, and you'll be plenty informed with what the plan is as of January. But I don't really want to talk about it here and now. So that's my answer to you, whoever asked this. Okay, 1:18. So I've got 12 minutes to wind this up. It looks like we are working our way through trying to find some sort of bottom here in crypto. It's actually a pretty reasonable location for some sort of pivot. Not looking for a huge move up here in the near term, but I could very easily see us work our way up a bit here from these levels. And for the lower time frame, site participants, traders, there's some interesting ideas out there kicking around. I mean, hell, if Donnie here finishes as a hammer candle today, then we know a trade through that high first thing next candle is a buy. I'd be very, very careful here, though, on believing these rallies that you see here. Why? Because number one, we've got a bunch of Chinese economic data that's supposed to hit us between the eyes later on this evening. So you can see Sunday, December 25th, we've got, and actually this isn't all of them. Oh, interesting. Thought there were more than that. But anyway, we've got data, and sometimes these data prints out on Sundays can rock the crypto market first thing. But probably more importantly, and I think what's going on here is it's a buy the rumor, sell the news. And what do I mean by that? Well, on Wednesday, we have FOMC, dun, dun, dun. So if you've never watched it before, we do a fun, at least I do a fun FOMC meeting commentary where Brian, of course, throwing in his 2 cents whenever I hear reporters or Jerry say something outlandish. And also watch the price action through the meeting. It's usually pretty enlightening. But, as of late, what we've seen is that the spec market, and I see things like the venture cap market, is just exploding higher. There's tons of venture cap stock really moving hard here. Banged out doubles on lithium stocks through the past week. I don't know where the hell that tweet is. As just one example, and actually is a great example, a little junior VCIM model that I learned a million years ago. Really, really simple stuff. Boom, free position established. But the venture cap market is really hot right now. And that actually in itself, remember the old expression, the what rises last. So if anything, on Fed Day, that's maybe when we see Donnie actually rally, because the blank, fill in the blank, rallies last. You all know how that goes. So be careful here, folks. If anything, see if you can tune in for that Wednesday show. And usually what happens is about 1 or 2 o'clock in the afternoon, the selling starts coming in earnest in both the futures and things like crypto. So enjoy the rally while it lasts. And like I said, we might have a nice little pop here in the market up into 13 EMAs and big fat round numbers and all that kind of stuff into the Fed announcement on that's Wednesday. But following Wednesday, I'd be very, very careful. And I'm certainly not buying anything else now, unless, of course, we see these lower time frame setups come in, but I'll just be adding to those trades. Okay, everybody, I think I'm going to leave the broadcast at that. Sure hope you enjoyed the offering. Slow and steady wins the race. 122, I got 8 minutes to get out of here, so I think I did my due. PMA for the win. Slow and steady wins the race. Try not to take no wood nickels. Remember what your number one job as a trader is. And the only thing left Brian say to you is a hearty bye for now.